Welcome to the Opening Bell Report.
I have to admit, I looked at my portfolio app this morning, and I genuinely thought it was glitching. I mean, I refreshed it 3 times.
Let me guess. You were looking at the ticker symbol INTC?
I was looking at Intel. It is January 21st, 2026. And if you told me 2 years ago, back when we were all writing eulogies for this company, that the most exciting stock in my portfolio today would be Intel, I would have asked you what you were smoking.
It is a pretty wild morning. The stock closed yesterday at, what, $54.25?
$54. I remember when it was struggling to hold on to 30. It felt like a zombie company.
Oh, yeah.
This lumbering legacy giant that had completely forgotten how to innovate. Everyone was saying, oh, just buy NVIDIA, buy AMD, Intel is over. And now it's like a rocket ship.
It's officially a bullish breakout, as the analysts like to say, but honestly, the price action is just the symptom. The disease, or rather the cure, is what we have the analysis reports on today.
Right, and that's the big question. Is this real? Is this just some meme stock rally, or did they actually, fix the engine? Because I've been burned by turnaround stories before.
It is very real, and the analysis we're diving into today suggests this isn't just a lucky quarter, this is the validation of a strategy they've been cooking for years. It's called 18A.
18A, I keep seeing that everywhere. It sounds like a seat assignment on a budget airline. You're an 18A, no league room.
It's definitely not that. 18A is the shorthand for their new manufacturing process, their 1.8 nanometer node.
Okay.
And the thesis here is pretty bold. The reports argue that with 18A, Intel has effectively transitioned from a struggling CPU maker into a premier foundry that can actually go toe-to-toe with TSMC.
Which, let's be honest, is a massive claim. TSMC is Godzilla in this industry.
Exactly. But the data suggests Godzilla might finally have a challenger.
Okay, so our mission today is to figure out how on earth they pulled this off. We need to unpack the actual tech, because I know it's not just marketing fluff, and then we need to look at the receipts.
Yeah.
Because apparently, there are 3 massive pieces of evidence from just the last few weeks that prove this gamble is paying off.
That's the plan.
Let's start with the how, the physics. Because you know me, I hear 1.8 nanometer node and my eyes glaze over. I know smaller is usually better, but why is this specific number, 18A, causing Wall Street to freak out?
So to understand why 18A is a big deal, you have to understand that we hit a wall a few years ago. You know how every year phones got faster and computers got more powerful?
Moore's law.
Right. Well, Moore's law started running into the laws of physics. We were using a transistor design called FinFET for over a decade. It was great, but eventually the transistors got so small that we couldn't control the flow of electricity anymore.
Right. Yeah.
It's like trying to stop a garden hose by pinching it with 2 fingers. Eventually, the water pressure is too high and it just sprays everywhere. Exactly. Electrical leakage. It creates heat, wastes battery, and it kills performance. Intel's 18A isn't just a smaller FinFET, it's a completely new structure.
Is this that ribbon FET thing I saw in the notes?
Yes. Ribbon FET, or gate all around. Remember your garden hose?
Yeah.
Instead of pinching it from 2 sides, imagine your hand wrapping completely around the hose.
Okay.
You have 100% control over the flow. That's ribbon FET. But here's the cool part. They stack these ribbons vertically. Think of it like real estate. If you can't build out because you're out of land, you build up. You build a skyscraper. Ribbon FET allows Intel to stack transistors on top of each other, getting massive performance in a tiny footprint.
Okay, so that solves the control problem.
Yeah.
But the analysis reports are screaming about something else, something called PowerVia. They're calling it the killer app.
This is my favorite part. Honestly, PowerVia is the real reason the stock is at 54.
Why? What does it do?
Okay, I need you to visualize a busy city street.
Okay, I'm picturing Manhattan. Chaos.
Perfect. In a traditional computer chip, the way everyone, including TSMC, has been building them for years, you have the Silicon City on the ground floor. Then, in the sky above the city, you have all the wires.
The power lines and the data lines.
Right. But they're all mixed together in the same airspace. You have these massive high-voltage power lines trying to deliver electricity, and you have the tiny data cables trying to send signals. It's a traffic jam.
Oh, wow.
The power lines cause interference noise that messes up the data signals. It limits how fast you can go.
So it's inefficient.
It's incredibly inefficient. You're wasting energy just fighting through the traffic. PowerVia changes the rules of the city. Intel figured out how to move all the power lines underground.
Underground?
They deliver the power from the backside of the silicon wafer.
The backside.
So now the sky above the chip is purely for data. No interference, no traffic jams, and the power comes in clean from below.
That sounds incredibly logical. Why hasn't everyone been doing this? Why didn't TSMC just do this 5 years ago?
Because it's terrifyingly difficult to manufacture. You have to build the chip, flip the wafer over, grind it down until it's microscopic, and then attach wires to the back without destroying the billions of transistors you just built on the front.
Wow.
It's an engineering nightmare.
So Intel took a risk.
A massive risk. They bet the farm that they could figure out the manufacturing before anyone else. And this report highlights the moat. TSMC has 2-nanometer node coming out, but their first version does not have backside power delivery.
It's still stuck in traffic.
They're still stuck in traffic. Intel has a 12 to 18-month lead on this specific technology. In the semiconductor world, 18 months is an eternity.
That explains the efficiency buzzwords. If you aren't fighting the traffic, you don't need as much gas.
Precisely. The chips run cooler, faster, and the battery lasts longer.
Okay, I get the physics now. We have the skyscraper transistors and the subway power lines, but cool science projects don't always make money. You can have the best tech in the world, but if nobody buys it, you're just a smart company going bankrupt.
Which brings us to the execution.
Right. The report lists 3 major wins from late 2025 and this month, January 2026. Let's talk about the first one because it involves a company that usually doesn't give Intel the time of day anymore. Microsoft.
This was the moment the narrative shifted. The report confirms Microsoft is using Intel 18A to manufacture their Maya 2 AI accelerator.
Okay, play devil's advocate for me. Microsoft buys chips from everyone. Why is this a headline?
Because of what they are buying, the Maya 2 is their custom AI chip. It's the brain of their data centers. For the last few years, Microsoft, Amazon, Google, they've all been held hostage by the TSMC monopoly.
Because TSMC was the only one who could make the high-end stuff.
Exactly. If you wanted the best AI chips, you waited in line at TSMC and you paid whatever price they asked. Microsoft hates that. They want options.
Sure.
By choosing Intel for such a critical, complex chip, they are telling the market, Intel's 18A works.
It's a vote of confidence.
It's more than that. It's a certification. If Microsoft is willing to risk their AI infrastructure on Intel's foundry, it proves the yield rates are stable. It tells OpenAI, it tells Amazon, hey, the water is safe. You don't have to rely on Taiwan for everything anymore.
That opens the floodgates. But if Microsoft gives them street cred, this next one gives them, well, invincibility. We need to talk about the Shield contract.
This is the big one. $151 billion.
I had to read that number twice. 151 billion with a B.
Confirmed just yesterday, January 20th, Intel is now the primary supplier for the U.S. Department of Defense's SHIELD program.
That is an insane amount of money. What is the government buying?
They are buying security. We've talked about this sovereign silicon concept before. The Pentagon looked at the map. They saw that almost all advanced chip manufacturing was happening in East Asia.
Which is, let's say, a complicated neighborhood.
Very complicated. The U.S. government decided they cannot have their fighter jets, their drones, their communication systems dependent on a supply chain that could be blockaded tomorrow.
Right.
This contract effectively declares Intel's factories in Ohio and Arizona as critical national infrastructure.
So they're like aircraft carriers now. Or the power grid.
Exactly. And from an investor standpoint, think about what that means. It's the ultimate too-big-to-fail insurance policy. The government has committed $150 billion over the next decade. That provides a guaranteed revenue floor that no other tech company has.
It de-risks the stock completely. Even if they screw up a consumer launch, Uncle Sam is still paying the rent.
And paying it well.
Speaking of consumer launches, though, I have to mention the third win because this one hits close to home. I've been a Mac user for years, mostly because I hate fan noise and I like battery life.
Yeah.
But this CES announcement about Panther Lake.
The Core Ultra Series 3.
Yeah, the benchmarks in the report are kind of shocking. They're saying it beats Apple's M series.
In performance per watt, that's the magic metric. For a long time, Apple was the king of efficiency. Their chips just sipped power while Intel chips guzzled it.
My old Intel laptop used to burn my legs if I wore shorts. It sounded like a jet engine taking off.
We've all been there. But this is where Power VIA comes back in. Remember the traffic jam?
Right.
Because Intel moved the power lines underground, Panther Lake is incredibly efficient. The report shows it beating the M series in battery life for the first time.
That is a massive psychological shift. If you take away Apple's battery advantage, the whole Mac versus PC debate changes.
It forces Apple to respond. But for now, Intel has the performance crown back.
So we've got the tech, we've got Microsoft, and we've got the DoD. It sounds like a slam dunk. But I'm going to put my skeptical hat back on. We are talking about Intel beating TSMC. TSMC isn't exactly a slouch. They are a juggernaut.
Oh, absolutely. And we shouldn't paint this as a total victory. The analysis is nuanced here. Intel hasn't beaten TSMC at everything.
Where does TSMC still win?
Density. If you look at the transistor counts, TSMC's N2 node can still cram more transistors into a square millimeter than Intel can.
Okay.
About 313 million versus Intel's 238 million.
So TSMC chips are smaller.
Denser. And that matters for things like smartphones. If you're designing the iPhone 18 and you need to save every micron of space for the camera bump or the battery, TSMC is probably still your winner.
Okay, so TSMC keeps the iPhone.
Likely. But Intel wins on performance. Because of PowerVia, they can run higher voltages, run faster, and handle more heat.
So for a phone, you go TSMC. But for a massive AI server in a data center,
You don't care if the chip is 10% physically larger. You care if it calculates 20% faster and uses less electricity. That's where Intel wins. And guess which market is growing faster right now? Smartphones or AI?
AI. By a mile.
Exactly. Intel picked the right battlefield. They aren't trying to win the phone war. They are winning the high-performance computing war.
And there's that other factor we touched on with the DoD, the geography factor.
The risk premium. If you are a CEO today, you are thinking about supply chain resilience. Intel offers manufacturing in the USA and Europe. TSMC is concentrated in Taiwan.
It's the Made in America tax, but companies are willing to pay it now.
It's not a tax anymore, it's insurance. If you rely solely on TSMC, you are betting that geopolitics will remain stable forever. That's a risky bet. Intel sells certainty.
And so let's talk about the bottom line. Because all this strategy is great, but investors care about margins. For the last few years, Intel's margins were, well, ugly.
They were compressed, and that's because of the outsourcing trap. Well, when Intel's own factories fell behind, they had to go to TSMC to make their best chips. Think about that. They were paying their biggest competitor to manufacture their products.
So it gotta hurt. You're handing your profit margin directly to the enemy.
Exactly. TSMC took their cut, but now, with the internal foundry model, Intel is bringing that production back home to 18A. They stopped paying the TSMC tax.
So every chip they make in Ohio instead of Taiwan is money straight into their pocket.
The report projects gross margins returning to 50% or higher by late 2026. That is a massive cash flow engine turning back on. Plus, they have the new revenue stream of making chips for other people, the foundry business, which they think will hit $15 billion a year by 2028.
$15 billion in new revenue. That's like adding an entire Fortune 500 company to their balance sheet.
It is.
Okay, I'm feeling pretty good about this.
Yeah.
But I have to ask, what breaks it? What is the nightmare scenario? Because manufacturing is hard.
That is the biggest risk. Execution. The report makes a very important distinction between high yielding and high volume.
What's the difference?
High yielding means the science works. You can make a good wafer in the lab. High volume means you can do it 10,000 times a day in a factory in Ohio with new employees without jamming the machines.
And if they have a hiccup?
The market has priced in perfection. The stock is at 54 because everyone believes 18A works. If there's a delay, if the yield drops, if the machines in Ohio start failing, the stock goes back to 40 overnight.
So they are walking a tightrope.
They are, and TSMC knows it. The other risk is a price war. TSMC has deep pockets. They could slash their prices just to bleed Intel out before the foundry business really gets a foothold.
Try to starve them before they can grow.
Exactly. It's going to be a brutal fight. But for the first time in a decade, Intel is actually throwing punches instead of just taking them.
It really is an incredible turnaround story. We've gone from Intel is dead to Intel is the sovereign foundry.
That phrase really sticks, doesn't it? Sovereign foundry.
It does. It feels heavy.
It should. The analysis in this report emphasizes that we need to stop thinking about chips as just computer parts. In 2026, silicon is a national border.
A national border.
Think about it. The SHIELD contract proves it. The ability to make these chips is what defines a superpower. If you can't make your own brains for your AI and your defense systems, you aren't really a sovereign nation. You're a client state.
Wow. So 18A isn't just about faster laptops. It's about who holds the keys to the future.
If Intel 18A really is the new standard for security and speed, it changes the balance of power between East and West for the next 10 years.
That is a lot to process. Sovereign silicon. I think I'm going to be thinking about that all day.
It's the new reality.
Well, on that slightly terrifying but fascinating note, we're going to wrap up. It's Jan 21st, Intel is at $54, and apparently the traffic jam inside your computer is finally clearing up.
Finally.
Thanks for diving deep with us. Keep watching those charts.
Don't forget to like, share, and subscribe for more.